Welcome to the premiere episode of Physicians Money Digest on Air, brought to you by Medical Economics and Medical World News. My name is Chris Mazzolini, and I'll be your host. The goal of this program is to be the premier source for practical, forward-looking, and insightful content to help physicians meet their investing and financial goals. And we've got a big topic up for discussion today: the Inflation Reduction Act, President Joe Biden's crowning achievement when it comes to taxes, healthcare, and climate change. I'll be joined by Syed Nishat, Senior Vice President at Wall Street Alliance Group, to discuss all things IRA, including how it may impact physician taxes and their investment strategy. Enjoy the show. Syed Nishat, thanks so much for joining me today.
Thank you, Chris, for having me again.
So let's talk about the Inflation Reduction Act of 2022. Can you give me an overview of this new law and how significant it is?
Yeah, Chris, as you know, the Inflation Reduction Act of 2002 that becomes law, last month when President Joe Biden signed the law. Now, this bill is actually a slimmer version of a previous bill called Build Back Better Act. Just to give you a background, this bill, Build Back Better Act, was introduced by President Joe Biden in year 2020. The bill size was massive. It was almost $2 trillion. And it has similar feature like Inflation Reduction Act. It talked about climate change. It talks about raising the corporate tax rate. And this bill actually passed a House of Representatives last year, November. But in December of last year, one of the key major player, Joe Manchin, he actually pulled support from Build Back Better Act because of the size and although also the negative publicity. I mean, if you saw the news, Biden was talking about raising taxes, someone make more than $400,000, and also the long-term capital gain taxes goes up as well. So because of the size and negative publicity, the bill lost support from the Senate last December, and so far there was no bill whatsoever for a while. That's what we thought. But I guess this new bill, Inflation Reduction Act, was a surprise because a few weeks ago, before the bill was passed, Joe Manchin publicly said no bill he will support that raised corporate tax rate. But looks like with Chuck Schumer behind closed door, they made this deal in July. Within a month, with Senator in Arizona, Christian Sinema, they actually came together, made some tweaks into the tax law, and the bill became a law within a month. So I guess the reason why they made this move is because they want to make it quiet, because the last bill, they had a lot of negative publicity, and they want to pass some sort of bill because I guess in November, we have a midterm election, and there's a good chance the Democrat may lose both House and the Senate. So, and inflation is through the roof. So they renamed the whole bill to Inflation Reduction just to maybe act on inflation. But if you're asking me in summary, what's the bill is different that Build It Back Better is pretty much the same provisions are there, but they took out that if you make more than $400,000, the taxes goes higher. What they did, they actually give more ammunition to IRS to collect more tax. We'll discuss in a bit. And they added lowering the drug prices, and the overall size is much lower. Now, whether it will actually tackle the inflation is up for debate. We will see. But in a nutshell, it's a slimmer version of the previous act, but now it's law. With time, we'll see how it affects the overall finances.
Yeah, so let's start talking a little bit about what's in this bill. Kind of hit it by the numbers. What sort of things should physicians look out for? I know that there's some stuff about electric vehicles. You had mentioned taxes before. Are there any important provisions when it comes to taxes and tax rates that physicians need to know about with the IRA bill?
Yeah, so let's just break it down with a number, the size of the bill, Chris. So there are different, elements they're actually spending money on, but the biggest line items, they're spending money on 3 line items. Number one, if you want to break it down, it's about $370 billion. They're actually spending money on climate change, and that's, I think, is one of the key agenda for the Democrat Party is the lower the carbon emission use by 2030. So almost $370 billion is going there, and that includes some EV tax credit. Now, first time if you're buying an EV car, the bill spoke about that you may qualify for a $7,500 tax credit. If it's an old EV car, you may qualify for $4,500. But there's a one catch to it. If your income is more than $300,000, you don't qualify. The MSRP price of the car needs to be below a certain amount, and the car must be actually built in North America, not US, North America. And so it means that, like, if Mercedes-Benz, if you buy a EV car, you don't qualify for it. Tesla, GM, you do qualify. Because most physicians are high income, most likely they're not going to qualify for it. And the dealers are actually looking for some more guidance. But as of right now, looks like there's certain criteria to meet. The second, they're spending a lot of money in IRS. On IRS, they're actually giving $80 billion. Let me repeat, $80 billion they're giving into IRS. A typical IRS budget annually is $12 billion. They're giving $80 billion in 10 years, so about $8 billion per year. So to modernization of the IRS, to hire more personnel and to audit more if it's needed. The third, they're actually spending a lot of money is healthcare, which actually I think applauded by the physician community. About $68 billion they're giving it to actually extended of Obamacare. It will definitely help people who are low income for sure. Now, where the revenue will come from all these things we spoke about. The number one source of revenue, around close to almost around in the range of 300 billion will be coming from corporate taxes and also excess tax and share buyback. Just to give you an idea, that there will be previously a lot of tech company, they're supposed to get something called depreciation and literally pay no taxes. But now this new bill, they're saying that on the book value, any company make over $1 billion in revenue, they have to pay at least minimum 15% corporate tax rate. And also a lot of companies, they actually buy back his own share. If that's the case, they actually have to pay 1% excise tax. So last year, almost a $1 trillion buyback happened. So they're assuming about close to 74 billion they'll be actually getting revenue if the company buy back his own share. I guess the idea is if you buy back his own share, you are supporting the stock. Might as well just spend money on research and development and hiring more people. That's what the whole idea is. And then, as I mentioned, that 80 billion they are giving it to IRS with the expectation they will collect $203 billion in taxes more. Let that sink in. They're giving 80 billion to collect 203 billion. So it's not a question of now, looks like if an audit happens, when the audit happens. Looks like that's what's going to happen for people who make higher income. And lastly, I think it's a good thing for the bill. They're actually negotiating some drug prices, especially that if your insulin drug, they're capping out to only $35 per month, and Medicare, the out-of-pocket maximum prescription is going to be $2,000 maximum out-of-pocket. And cancer drugs, I mean, I think that will definitely help. It's starting with 10 drugs. It doesn't get effect in few years, but they will lowering down the drug cost, and they're trying to, by lowering it, it will save healthcare system almost about close to in the range of $265 billion. So what's the net effect? By doing all of this, the expenses and the revenue, they're expecting about $300 deficit reduction overall from the GDP. If that what happens, the deficit goes down. Technically, it should reduce the inflation, but in ballpark, that's what the number looks like. Now, the question you ask that how does it affect physician? Because the bill specifically mentioned that if your income is below $400,000, you should be fine. The whole idea is if income is more than $400,000, that IRS is looking to cut down the loopholes. Now, what does the loophole mean? We don't know anything, but the physicians, they are in a high income bracket, so most likely they will get targeted the most. And physicians use advanced strategies all the time, like in your forum, like I wrote about it, and also a lot of a good financial advisor wrote about cash balance plan. A lot of physicians do cash balance plan, and their adjusted gross income goes down. Now, Chris, when you do a cash balance plan, a lot of times you do something called pre-funding. Pre-funding means next few years funding, you do it in one shot. If you do that, your income goes down a lot. So make sure physicians, if you're using strategies like this, use a good actuary. because the audit comes in and you reduce your income a lot. What was the formula did you use to do all of this? That's number one question. And number two, we see physicians all the time. They're gifting their asset, their high net worth individuals a lot. And in 2025, the gift tax exemption is going down, is expiring. So we see physicians who are high net worth, they're giving gift right now to their children. Now, when you give gift, a lot of times we see physicians use some discounting method to reduce the price of the properties artificially so they can actually gift more. If you're using advanced strategies like this, make sure that you use a good firm. If an audit happens, you actually have some backup. And also, I will talk about that. A lot of physicians also use the rural area tax credit for physician by HHS. They are using advanced Medicare payment. Make sure you need it before you use it, because now IRS is very strict. If you're using all of it, have good documentation. And lastly, don't make mistakes in tax filing. We are saying right now, this is a good time to sit down with your CPA. A lot of times we see physicians are so busy, they don't look at their finances. Hey, this is a good time. Don't just outsource it. Make sure you're involved into it. Have receipts for everything. Don't make mistakes. Like, we were looking at a client of ours recently who has a lot of rental income. And in a tax filing, the CPA made a mistake. The rental income should be in Schedule E. They put Schedule C. It's just a typing error. But again, it opened up a big IRS audit, and IRS can go back a few years. So mistakes like this, by all costs, avoided. Work with a reputable CPA firm. It has to actually have a team who documents everything. So in an event an audit happens, you are overall protected.
Okay, great. That's some great advice. Thanks for sharing that. Let's talk a little bit about the effect of the IRA law on the stock market. Obviously, there's been a lot of talk about this law. You had mentioned inflation and what's going on with the market. Do you think physician investors should be wary of how this law may affect the market? Is this a time where people should look to reallocate their portfolio? What are some of your thoughts on that?
Yes, a great question. So we don't think the market has completely digested the Inflation Reduction Act because it was so quiet. Now Kamala Harris is tweeting about it because the bill is passed, right? So remember when the last job tax cut law passed, it took some time for the market to digest it. And right now, market is a bigger thing to worry about with inflation. This bill, I'm talking about the raising the minimum corporate tax rate, doesn't affect until 2023. So it will take about a couple of quarters to see how the company behaves in it. So I think the company who will get affected the most are tech companies, because they are the one who enjoyed very low taxes and the depreciation. Remember, the depreciation still is there for manufacturing company. But for tech company, like high-flying tech sectors, they really enjoyed a low tax environment. So if a 15% minimum tax is there, it will affect their balance sheet. So physicians should sit down with their financial advisor, because this year, Chris, the sector that get affected the most is technology sector. Like Nasdaq is down more than S&P 500. So make sure you diversify properly. Don't just be, again, all in tech sector, high tech companies. Make sure you have blue chip sectors as well, S&P 500 sectors as well. Diversify properly. So if the bill goes in effect, a company with a good balance sheet should be able to absorb it better. So make sure you diversify properly.
Okay, great. Are there any other sectors that should either be avoided or that maybe will look attractive to investors? Any others? Yeah, the sectors to focus on during inflation, I think the inflation, Chris, is here to stay. It's not going to happen overnight, because what happened, it is true that the mortgage rate has jumped to almost close to 6%. People are still buying houses. The demand is extremely strong. And Fed recently announced that they will keep raising it, whatever needs to be done to get the job done. So it seems like the inflation is here to stay. They're not going to fix it overnight. So since inflation is here to stay, what are the things to focus on? So number one to focus on is take a look into Treasury I bonds. Is making a headline nowadays because of the inflation. The rate is almost close to 9.7% right now. It's a 5 years lockup. And obviously every year you have the option to get out. The max you can buy is 10,000 per year, but it's still, because of inflation, the rate is 9.6%. It's a good time to buy some Treasury I shares at these sectors. Financial sectors tends to do extremely well.
during high interest rate because a lot of arms about to expire for the mortgage rate. So if the mortgage rate goes for 2% to 6%, the bank will start to make money. So again, try to overweight into financial sector into your portfolio. Also, the sectors that are kind of recession-proof are utilities because the temperature is through the roof and people will be always using heat during cold weather. So companies like Con Edison, this tends to do well. People are always going for high-flying stock. Con Edison, a dividend-paying company, recession-proof business to try to get into this kind of sectors as well. And lastly, consumer staples like companies like McDonald's or Coca-Cola, they have the ability to pass it to the consumer. So these sectors tends to do very well during recession as well and high inflation period. Now, the sectors to avoid in this market are long-term bonds, Chris. I mean, these are like 20 years, 30 years bonds. Try to avoid it for retirees. They're looking for high yield. Don't go for this kind of long-term. Go for short-term bonds and alternative investment like gold, silver. They tends to do very well during this time. And also, a lot of physicians invest into real estate. Try to avoid commercial real estate if it's all possible because of the inflation, Chris, the price of construction is up almost as high as almost 100% for the last 1 year. And they are investing into REITs, they invest into commercial retail. And the REITs projections are to give around 7% cap, but it is quite tough though to get 7% cap. How are they going to do it? So what if the one REIT becomes insolvent? So that's why it's important. Don't get into too much into the construction sector. Try to get into other investment sectors which are more benefit. And lastly, I will mention a lot of physicians are holding on to a lot of garbage stock, we call it, that actually went up due to COVID. So COVID, is under control, looks like, and they only went up because people are working from home. But right now in New York City, at least we see it, that a lot of banks and companies are making it mandatory to come back to work. People are going back to work. So this stock may not never go back up. So make sure that you have the sectors that do well when the inflation subsided and market recovers, like blue chip companies tends to do very well. So these are the sectors to focus on, and these are the sectors to avoid.
Great, thanks for that. Last question, we've sort of touched on it a little bit throughout the interview, but the Inflation Reduction Act is the name they chose. A lot of it was political. Do we think this act, I know you said it's here to stay in the short term, will this law have any effect on inflation going forward? Will it ease it in any way, do you think?
Yeah, I'll give you both option, both point of views. One point of view is that if the drug price, if the price overall goes down, what happened that it's a huge burden in the economy. So, and then if US become less dependent on oil, the gas price should be under control. So the logic they have it may work just fine. That in 10 years, the overall inflation may go down. But the counter argument could be that all the numbers they have it is a projection. So for example, they're expecting $74 billion from share buyback program. So, okay, what if the company don't buy back his own share? What if they pay special dividend? Okay, so their revenue is not there. They are giving 80 billion to IRS to collect 204 billion. Okay, where the money is going to come from? IRS is going to audit everyone. So one of the, I guess, arguments by Joint Committee of Taxation is that if the minimum corporate rate goes up to 15%, then the company to make it break even may lay off more people. And that can, and the IRS may have to actually audit them to collect more taxes. So it may add it back to the deficit. It could be counterproductive as well. And lastly, they're talking about reducing the drug prices. Remember, nothing gets effect now. We will see the effect in 2025, and it's only 10 drugs they're talking about. So again, I think this is how much is going to affect inflation is up for debate. But the way we see it, that it is more towards climate change. They're investing money. Overall, the consensus is it will have little dent on the inflation we're seeing. Fed has direct effect on inflation rather than just having a bill because they just passed $2 trillion. How can it just pass just a small bill and it will have an effect on the inflation? We're seeing it. So that's what the overall consensus is.
Syed Nishat, thanks so much for spending your time with me today and for sharing your insights with our physician audience. I really appreciate it.
Thank you, Chris, for having me again.
Thank you to Syed Nishat for the great discussion. That's all the time we have. Thank you for watching. Physicians Money Digest on air. So long.